ready to move on to the receiving
When
payments
you
part?
do a sales receipt, does it automatically, for a certain customer, does it automatically put an invoice in there and then show where they paid it?
The sales receipt is the invoice.
Okay.
So it makes one document, it is essentially the invoice and the payment, and you enter it into one document. So when you go to the customer screen, you do see that they had a sales receipt, which would function like an invoice. So if we go here to, again, that family room, new transaction, oh, sorry, not a sales order, we need a sales receipt, new transaction, sales receipt, and we plug that in. So we'll say remodel, and because it's a receiving a payment and posting an invoice at the same time, we would have to, on the sales receipt, say, well, she paid via check, the check number was this, and the item was that, and it was that amount, and then when I say save and close, in her profile, now I need to take this off from only being invoices, because now it's a sales receipt. In her profile, I have a sales receipt, and I can see it's different, when it's an invoice, it says invoice here, when it's a sales receipt, it posts there. They're appropriate for things like, so say today someone says, at the end of class, hey, I think I really want to get that Premiere. Can you go ahead and order that for me? And I say, sure, and they say, can I just pay for it right now? Because, I'm here, rather than me mailing a check, how much is it? And I'll pay for it right now. If they wrote the check, I could simply do a sales receipt. Very often, not very often in my field is the payment and the service happening at the same time.
Either,
Right.
but every now and then we do a COD, so they have to pay for something when they pick it up. Oh.
And so when that happens, the sales receipt is appropriate. Someone says, I need Premiere, I'll just write the check today. I wouldn't produce an invoice and then receive the payment, because it's really, I would just go in the screen and just do
Now,
both
will
at
the
the same
check
time.
go into the undeposited?
Mm-hmm.
Okay.
Yep. So it's really like doing an invoice and a received payment.
Yeah, but
It's
it's only one
It's
step.
just one step.
Yeah.
So particularly for people who do that all the time,
Mhm.
rather than having to make an invoice, receive payment, make another invoice, receive payment,
Yeah.
it's one screen that is kind of dual purpose. So in those instances that happens, then it's
Yeah.
absolutely the appropriate screen to use. All right, let's move on to 7, receiving payments and making deposits. There are a lot of options for receiving payments in QuickBooks. QuickBooks will accommodate nearly every scenario. It's just our understanding of what we're trying to get it to accomplish for us. So the first example with receiving payments, and again, we're still in the customer area, so we've talked about estimates, contracts, progress invoices, but when the money comes in from the customer, what do we need to do with it? So first option, and the most probably single and straightforward, simple, record payment in full for a single job. So we billed one customer $5,000, job's done, they paid $5,000, simple and straightforward. So in that instance, and let's find a customer that maybe is that way, and so we'll go to reports, customers and receivables, and open invoices. Let's see who owes us money. So let's see, here we go. So Robert owes us $14,510, and so we're going to pretend that check just came in the mail. So first scenario, we are going to customers, and we're going to receive payments, and I am going to find that job, and sure enough, it tells me down here that he does owe $14,510, because again, we're saying one invoice for one job and one payment. So the most simple of scenarios, he paid via a check. That is correct. That's today's date, and that's his check number. And I can hit save and close, and he'll be paid in full. Simple scenario. It's not always what happens, but when it is a 1-to-1 ratio like that, that's my steps. That payment is then going to drop into my undeposited funds, because I'm only recording at this point that I've got the money, not that I've taken it to the bank yet. So I'm just saying he's paid. I might have a stack of mail. I might have 5 or 6 more checks that I need to enter before I record my deposit. So that's page 6. On page 8, we have a little bit of a different scenario. In this case, my customer only paid part of the bill. And of course, I need to give him credit for that, but I don't need the invoice to be paid in full. So same customer, he's got the open invoice, but he decided he was gonna pay about half. If I only post $7,000, notice that the payment amount over here to the right shows $7,000, so it shows amount due, this, amount paid, that. When finished, QuickBooks is asking me, do I want to leave this as an underpayment because he's short paid by $75.10, or do I want to write off the extra amount? Well, most of the time we're not writing off the extra amount. We're just going to say, well, if he only paid part of his bill, I'm going to leave the rest of the invoice open, and then when I save and close that, his account would reflect that he had only made a partial payment. In fact, let's do that. I'm going to hit save and close. And to find him, I'm going to go to customers. I can start typing his name here, hit my magnifying glass, and there he is. I see my invoice, I see the payment that I just posted, and then his account balance now is the difference between the two. The amount that he short paid, it's showing that he still owes. Great, no problem. I can send him a statement now that reflects his original invoice that he has made a payment, and then now this is the remaining amount due. And QuickBooks will accommodate that. So that is on page 8. On page, I believe 10 in your books, applying one payment to multiple jobs of the same customer. This gets a little bit more complex because we'll use Christy Abercrombie as the example. I'm going to add an invoice here so that she'll have an invoice open for 2 different jobs. Same customer, 2 different jobs. Drop all of that in. She's got some billable expenses. There we go. Drop it in. And save and close. Oops, and now I don't have a question. There we go. All right, so now she's got an invoice open on the family room and an invoice open on the kitchen. She decided to send me one check. This happens particularly, a lot of times you're doing like business to business, and if there's a GC on the job and you're working multiple jobs, when they get to check writing time, sometimes they'll pay you for multiple jobs in one check. So in this case, I need to do a receive payment, and the steps are outlined here on page 10. This is the only instance you would do this. You're going to receive the payment to the customer's name. Typically, you are going to go into each individual job, but if you only pull up the job, you can only apply the payment to that job. But if you pull up the customer, it will pull up all the invoices for all the jobs underneath it. So only in the instance of them paying for multiple jobs on one check would you pull up the customer's name. And she paid $1,000 for that one straight invoice, and then she sent $15,000 for what's open on the other job. Because any field I can type a number into QuickBooks is also a calculator, I typed in 1,000, I'm going to hit plus on my keyboard, 15,000, and enter, and it functions as a calculator, and so now I've done the math. That is the amount of her payment, it matches. I selected it as a check, it is this check number. However, I need to make sure that 1,000 of it is going to go, because she wanted to pay off that one job. So it's selecting the oldest invoices, but that's not what she told me that she's wanting to pay. So she wanted to pay off the kitchen in full. That's what she's indicated on her check. So I need to make sure this money applies to the kitchen. And then everything that's left, I can apply to the family room. So I've applied kitchen the $1,000. I've applied the remaining amount, and it's telling me it's an underpayment because this was a $2,000 invoice, and I only had $1,000 left to credit toward it. So that invoice is underpaid, as well as several others that are still open. And there we go. I can apply that money to the multiple jobs in one check. We hope that we get paid for each job on a single check and people don't spread multiple, but when they do, our instructions for that are on page 10. And that would work if I were to pull up The one project, it would show paid in full, and then the other would show a partial payment on one invoice and then several invoices still open. On page 12, something we do see often in this industry is, well, I don't know that overpayment is what we normally call it. More so like page 14, prepayments or down payments. Overpayments and prepayments and down payments are sort of handled the same way. So let's do one of those. I'm going to clear this and I'm going to close out. I am going to go to somebody who owes me money. There we go. Cars Pie Shop. I wonder if they like any services and like to do a trade. That sounds very nice. So, Cars Pie Shop. We've contacted them and we're going to do a small job for them. And we've asked for 20% up front. Pretty normal. I sent them an estimate for the job, and the estimate, the bottom of the estimate says, if you accept this estimate, please sign and return the estimate and provide payment for 20% of the estimated amount. They've now written me that check. I tried to get them to pay in pie, but they keep sending me checks. So new transaction, receive payment, and we'll pretend it was a $10,000 job. They sent me this amount. They sent a check. I filled in the check number. But notice it says here, there are no unpaid invoices for this customer. Can I post this payment? Absolutely. Because QuickBooks is still going to retain that they have paid this money. So when later I produce the invoice, this credit is just available to pay the invoice that's there. So this would work for our prepayment scenario on page 14, whether you call it a down payment or a prepayment. When you collect money before you've invoiced, you put the money on their account and you leave it there until you've invoiced. A common error we see is that people will send an invoice and put a memo on the invoice that says like down payment due or deposit due. If you apply the money to that invoice, what's going to happen when you start progress invoicing? If this was a $10,000 job and I was going to bill it in multiple phases, if I make an invoice to say I need the $2,000 down payment, when I go to progress invoice, maybe my first progress invoice, I'm going to do $2,500. I'm going to send them an invoice for $2,500, but they've already paid $2,000 down. For my progress invoicing to work, for it to bill out all of the estimate, I can't already have billed $2,000 because then how am I going to put what I'm billing into the progress invoicing, because I already put an invoice in there outside of progress invoicing. So the correct way to do it is to ask for the payment, record the payment, and leave it as a credit on their account, or go into your progress invoicing and send them an invoice for 20% of the contract amount. And so depending on how your company does it, most people will request the down payment, and then when the work starts, do the progress invoicing so they can keep up with how much work they actually have done, rather than just generating the invoice for 20% and then catching up, billing the rest as they do it. So QuickBooks will understand this. If I save and close this document here, it's going to say, well, this is an overpayment. Do you want to leave it on their account? And I say, yes, I do. And then now notice his account balance is negative $2,000. That means he has a credit of $2,000. If later I go in an invoice and I put this in, I bill him for the whole job, we're done, and then I say I want to apply that credit, yes, there it is, I pick up the $2,000 credit, done. Now I'm going to bill him for a balance due of the remaining $8,000 because I can already reflect on there that he did the down payment of the $2,000, save and close. When I come back to his account, he just owes me $8,000. And I've got a nice record of his $2,000 payment, as well as I billed him the full $10,000. So what we don't want to do is send an invoice requesting a down payment and then later send an invoice for $8,000, because if I make an item called down payments, it's not mapping to what the income line was. I can't use progress invoicing. So I really want to still use all of my same procedures, correct procedures for progress invoicing or regular invoicing, and simply handle the down payment as a credit on the account rather than invoicing for a down payment, unless I'm going to send an invoice for the first 20% of my progress invoicing. So that's the only scenario that would be appropriate. All right, let's keep going in this chapter. All of those next pages that we've demonstrated. So let's jump ahead to page 18, talking about making deposits. Again, a very complex process that, if not done correctly, requires a lot of work to clean up. So I want to caution you on this idea of receiving payments and making deposits from undeposited funds. So if we've received the payment correctly for the customer, so we invoiced them, they paid, and we have the money, but we haven't gone to the bank yet, all of that money is sitting in an account called undeposited funds. Undeposited funds, we said yesterday, is not an a typical accounting account. Accountants or tax preparers who don't use QuickBooks, when they see a balance sheet and it says undeposited funds, you'll often get a phone call saying, what's wrong with your balance sheet? What is this undeposited funds? Because it's not a common term, more commonly called deposits in transit, something like that. So QuickBooks calls it undeposited funds, and that's a very simple, straightforward term that we all understand. It's undeposited because we haven't deposited it yet. So very simple and straightforward in terminology. Conceptually, however, we want to take a look at what happens with the money after we receive it. So if we've received a payment and haven't gone to the bank yet, when we go to banking and make deposits, we're going to get a pop-up. It's going to say, here's all the money you haven't taken to the bank yet. Are you taking it to the bank now? And I'll say, yes, I have this check, and this check, and I'm going to the bank now. I'll check off everything I intend to deposit. I'll say, okay. It will drop them into the deposit screen for me. I would never manually enter those into the deposit screen. And then I confirm, yes, it's going to the checking account. Maybe today I'm taking it to the savings, whatever account it's going into, today's date. And then the rest of the form is filled out for me. The only thing I'm going to do is either print this deposit slip to take to the bank, or I'm going to fill out the deposit slip if I'm not using printable deposit slips and confirm the total that I have on my deposit slip is matching the total on the screen. And I've got 3 checks in my hand and they total this, the 2 match up. I'm all set to make my deposit. When I hit save and close on this, I will have $9,095 show up as a deposit into my savings account. Very straightforward process. It kind of does the steps for you. You just check off what checks you're taking to the bank. Where some of the errors come in are when folks see here that the from account is undeposited funds. When I close this and then open it back up again, it will still say undeposited funds. And we get a lot of phone calls, people saying, well, this has already been deposited. The bank's cleared it. I've even reconciled it, and it still says undeposited. That is true. Because where did the money come from? It came from undeposited funds. You got it from your customer. You put it into a bank, or for some people that's their bottom drawer. For some people it's the blue money bag. It's wherever you keep the checks until you take them to the bank. Could be in your wallet, in your back pocket. Wherever the checks go when they come in, that is your undeposited funds. It's a little bit different place for everyone. While it's sitting there, it's an undeposited fund. So you got it from the customer, you put it into undeposited funds. So the day you take it to the bank and it asks you the from account, where is it coming from? It's coming from undeposited funds. So even after you record the deposit, that word is never going to change, because that's always going to be where the money came from. So that's one problem sometimes we see with this screen. The other that we see is sometimes people will say, well, this says undeposited funds, but that was for the installation. I'm not even sure if this account has installation. So they will change the word undeposited funds to whatever the income account was. So, that's not undeposited funds, that was design income. And they'll try to change it there. And we don't want to change it there because we've already made the invoice and received the payment appropriately. So we don't want to change anything on this screen because we've already done the steps of saying who the money was from. So we don't want to try to change undeposited funds. The other we see is when this step doesn't happen. So if you have your pop-up, and I'm going to go back to the beginning again, close this. I'm gonna hit N on my keyboard for no. And I'm gonna go to banking, make deposits. If you bypass this screen and don't pick up these deposits and you just say cancel, you can come here. So if I say Christy Abercrombie, and this was for design income, and she gave me, and I could even record the check number here, and it was this, and it was that amount. Can I post this deposit? Sure. QuickBooks will absolutely let me post straight to the deposit and record the name, record what the service was, record the check number. But guess what happens if I save from this screen? I have double income because I already received the payment from Christy through the received payments, and it's hanging out there waiting to be deposited. So I've got I've got undeposited funds hanging out there, plus I recorded an extra income line, so I've got double income. And when I go to Christy Abercrombie's account, guess what? Even though I put her name here, because I bypassed accounts receivable, I won't see this payment show up in her profile because I just went straight to deposits and I didn't do receive payment. So kind of like yesterday we talked about the interbill pay bill, and if you choose to write a check instead of pay a bill, you go back to that vendor and the bill won't be paid. Works the same way in reverse for customers. If you make an invoice and you don't receive a payment, you just record a deposit, you'll go back and that invoice, it could be the exact same amount of the deposit that you record here, the invoice will still show as open, and this transaction won't appear in their profile at all. So as you can imagine, some customers could be a little upset with that, so we want to make sure we're solid with these steps. The idea is receive the payment, and if you think about the type, so you might do jobs where you might get 2 or 3 big checks a month. Some places get 25 checks a day. So, and they might not make their deposit drop every day. So the idea behind this is you can receive the payments all day, every day. You want to receive the payment the day the customer pays. You want to record that you got that money, because what if you assess late fees? So if they're open after 30 days and the check came in on, the 28-day mark, but you wait until you go to the bank to record the received payment, it could actually assess them a late fee, and you had the money before that. So you always receive the payment on the day that the funds came in, but that you aren't forced to then record the deposit. You just receive the payment, put it in undeposited funds, and whenever you go to the bank, you record the deposit. It could be a 5-day lag. You might get checks on Monday and only go to the bank on Fridays. That's okay, QuickBooks will accommodate that, but the idea is always receive the payment, let it sit there in queue, and then the day that you record your deposit, go ahead and pick all those up and drop them in. And that's what it's designed for. So even if you only get 1 check in a month, still receive the payment, and later, you might take it to the bank the same day, but still receive payment and then make deposit from undeposited funds. That will cover all your bases. The customer gets credit and you have something to put into your bank account. And you'll wait till you're actually taking it to the bank, because what if you have 4 or 5 of them together? You don't want to record each received payment as a separate deposit, because then when you go to reconcile, we did reconciling yesterday, you'd have to sit there and add them all up. So the bank might have a $10,000 deposit, but you have 4 $2,500 checks. You've got to add all those up. Okay, all those, yes, that does add up to this. And so you don't want to create extra work for yourself. You just want to wait till the day that you're going to the bank, say select all, and then instead of a $95, a $7,000, and $2,000 on 3 separate lines in your reconciliation, you'll have what the bank has, which is $9,095 as a total. Much, much easier for the reconciliation process, particularly if you deal with a lot of payments in a month. So that's page 18, making deposits. On page 21, it just shows you a screenshot of how the deposit will appear in your register. You'll notice on the bottom of that, the section that's highlighted, the 5,418, notice it says split. What does split mean? It's not a banana split, I'm sorry. Can you tell I'm ready for it to be lunchtime? Every word sounds like food to me. Split means that there are multiple lines in that transaction. So rather than only showing you the first line and maybe the information is on the 5th line, and you think, oh, it's not there because you can't see it, it says split, which tells you there are multiple lines on this transaction. So if you need to see all the lines, you need to open the transaction. So that's kind of a little heads up that it's not only that one line. If there's only one line on there, that means there's nothing else in the transaction, so you don't need to double click it to open it to get more information. Page 22 is how to handle a customer bounced check. Now, we hope that this never happens and more things are being paid via credit card than check these days. But the reality is, if you've been in business for any length of time, someone, intentionally or not, has written you a bad check. And so we've got a quick video on how to handle the bounce check, and it will go along with this section.